Hello, this is Dave, and welcome to Equities Story. I'm with the Wolf, and we've got a lot of stories to go through today. And this is just a general share advice and not personal advice. And Wolfie, let's get firing away. So, hang on.
Dave, I'm excited. I've got, like, tell you what, I've got about 7 or 8 stocks that I've circled, which means I'm liking it. Let's go.
Yeah, been some good results today, Wolf. So let's start from the top. Let's start from LYL.
Yeah.
So
yeah.
the price action looks really quite good on the charts, Wolf. Far away on the story.
Yeah, look, they actually delivered a very good result. I'm just going to give you some of these updated PE ratios because I've just been writing all these EPS, right? So just give me 1 second for that one. 117. It's trading on 8 times PE, Dave, with growth to come in FY24. I'm liking this. I think this is bouncing off the trend lines. This is a buy.
Yeah, definitely, and certainly definitely a buy. Wolf, what about AUB?
Yep. Strange price action today. Up over $30 on the result, down to 28. I don't think the market doesn't know what to do, but the result was good, and they still flagged. They give a nice guidance of another 20% in 2024. You got to like it. I mean, it was obviously a pretty good year. Maybe what the market was expecting, maybe more. I don't know, but remember, they are under promise, over deliver. So I'm liking this. If it comes back to the trend lines, buying opportunity.
Well, definitely, and I don't know. It went up, it hit our target price, and down it goes again. So a little bit strange.
Yep.
SRG.
Yep.
It's been a really solid performer and a good chart. Last few weeks, and Wolfie, a good announcement again.
Yeah, look, I've really got to really like it. Just before I go on to the SRG, just AUB with what it's trading on. It's trading on 21 times, which is not too expensive for a really good growth story at the moment, right? So that's why I'm thinking you can probably buy it on the trend, back on the trend lines. All right, so SRG, Dave, very good result, very good result. About 40% above the previous year. Guidance, if you don't give guidance, you're going to get absolutely hammered, I reckon. So guidance of about 20% in 2024. These guys are trading on, let me just have a look. So 74 cents. I'll work it out for you right now. And they are trading on 11 times. Not too expensive. Again, I think it's a decent story because remember they've been coming up with upgrades. I think there's another decent story you can buying on the trend lines with confidence. All
right. Some of the big ones now coming up.
Yes.
But Hub is up 13%.
Yeah. Huge ups, the bottom line movements, Dave, over 150% profit up from the previous year, right? So you can see the bottom line's improving now, which is brilliant to see from Hub, net wealth, and so on. So let me work out what these guys are on at the moment. It's still probably going to be expensive, right? But it's starting to come down to some reasonable numbers. So let me just work that out. 60 times.
60 times.
Yep.
It's still very expensive, isn't it?
Yeah, but it's coming down rapidly. So I think maybe next year moving get down to 40, 30. So this is why you're probably looking at Hub and so on. You think to yourself, really good result. I'm liking this. I'm going to be probably buying it if it in the low 30s.
All right. Excellent, Wolf.
Yep.
Mad.
Yep. Another one, very good result, Dave. Come up with about 50% growth this year. Guidance, thank you MAD for giving us a guidance of 30% growth and PAT. And remember, these guys are perennial under promise, over deliver. So you gotta liking that. Any company you can find in this type of environment with a 30% growth guidance for FY24, you'll snap it up. I'll actually bite your fingers off.
All right. So again, it's had a little bit of a run.
Yep.
Any weakness, it's worth. I think a lot of people holding it. Wolf. Any weakness is worth having a look at.
Yeah, I think so.
PWR, it's holding above trend, Wolf. This is a little bit of a dividend payer.
Yeah,
but how's the story looking?
Look, it was very flat results. I had a look through it. There was just no movement on the bottom line or EPS. So really strange because the top line went up. So presumably they had some expenditures and so on, right, in there. The car space is going very well at the moment. The car sales are going extremely strongly. So they should be at least holding, which they are. And if I just give the numbers out, let me just have a look through. They are trading on 8 times, which is not too expensive, right? So you can see 21% revenue growth, but look at that, just no growth whatsoever on earnings per share. So from that point of view, you'll leave it. You've got a little bit better dividends, you can see, right? Well, actually pretty flat because the interim dividend was up, the final dividend was down, so actually flat right there. So same old for PWR. So you're holding it as a dividend play, no problems.
Okay.
Yep.
So the most probably the one of the most famous lithium stocks around, Wolf.
Yeah.
In Argentina is the how they coping with the inflation there.
They've got 2 mines. They've got one in WA and one in Argentina. $500 million in profit, Dave. That's pretty good. I suppose they must be doing okay. They must be doing okay in Argentina. I don't know were they playing with pesos or dollars? I've got no idea. But at the end of the day, it's $500 million in US dollars. So you can probably translate it to about $800 million. Very good. That's why it's still one of the probably top 3 lithium stocks in Australia.
Okay, let's look at DTL because this one has been solid as, Wolf. And when it didn't look terrible, but this is what happens if you give no guidance, I suppose.
Yeah, it's definitely a part of that, but I'm surprised at the big drop. I have to say, I mean, that's just harsh. I mean, they're coming out with the decent numbers, right? In a 22-something%. They failed to give guidance for sure. That's going to be a negative against them. Are they just missed expectations as well on this? But that is harsh. And this is why, Dave, sometimes you win them, sometimes you lose them. That's why I'd rather not be in that in this instance, where when there's a reporting season, probably best to be out than in. Because like I said, it just could be like all over the shop. But yeah, look, I think it'll bounce back eventually, but for the moment, let's just see how it settles at the end of the week. Look, I said, I don't mind that result. It's just the fact they didn't give me any guidance. I don't even know what they're going to be growing at. So for me, yeah, it's just a very harsh reality of the markets.
Anyway, what's going on with Mr. Kogan?
Dave, I don't know. Again, I don't understand. Look, when I said there seems to be working the bottom line better, they are. But I don't understand why that big jump from $4 to $6, 40, 44, when you see the results. Terrible, absolutely terrible results. I know that their bottom line's improved. Whoop-de-doo-da. It's weak. It is weak. The top line is falling. Oh, God, Dave. I think the retail right now, I think this is not my favorite. I have to say, I prefer PMVs of the world. I prefer the BRGs of the world. Nah, sorry.
Because this was a failed trend that we put on, right?
Mm-hmm.
And they put an announcement out on the 26th of July, right?
Yep.
Which encouraged us to put this out as a trend and that it could go higher.
Yep. And there's some truth in this, this announcement where they are improving the bottom line. Yes, I can see it, but look at the active customers. They are falling off a cliff. Just going, what the hell is going on? Oh, Dave, no. For the moment, I wouldn't touch it.
Okay. It's again, luckily we had a stop loss on it, so that's why you need a stop loss. Now MP1 Wolf. Wow, look at that.
Dave, I'm loving this. I'm loving because they've come up with another upgrade to its EBITDA, right? They've obviously saw the light. The light bulb moment went off and go, we got to get this profitable. We got to get this. Otherwise, we'll be going at $5 for the rest of our lives. So they've turned the business around. So they basically made 150 million in revenues. The losses dropped from about 50 million to 10 million, Dave. So really, commendable result, even though they had a loss. But it's the next year where they're guiding a really strong upside where they've upped the EBITDA, going cash flow positive. So presumably they might get a profit out of this next year, right? And they've also guided to about 20% growth in revenue side. Bravo, MP1, bravo.
Happy days.
Yeah,
I think if it looks like this by the end of the week, we're going to start trading that. NXL, which we are trading, not far off hitting that first target.
Yep.
Just under that 186 Wolf. And the chart looking very good, actually. It's really starting to take shape, isn't it?
Yeah, and another little good announcement here where we know they've got lots of issues still, right? It was a high risk trade and a high risk hot stock, but you had to listen to our madness to understand why we put it on, and it seems to be playing out exactly what we thought they're going to do. Dismissing another case against NXL from I think previous directors. So for me, another one that's really, you can put to bed less risks involved after that dismissal, and possibly it could hit that 186, Dave, in the next couple of weeks, I think. And then, we've already hit our target almost. I mean, it's pretty good.
Yeah.
I don't know, there's people going, it's going, you're going backwards. I bought it at 155 and it's under 130. Patience, young grasshopper.
Another good hot stock. Let's have a look at MVF. So this is Monash. Again, pretty steady, Wolf, pretty solid.
Yeah, nice numbers. Nothing outstanding. 17%, growth, which is good. And plus, obviously, they're guiding quite well for next season. So, look, I think if you're struggling for ideas, you want to find something that is a little bit steadier, then you've got this MVF, which is doing quite well at the moment, and the chart's not too bad either.
Yeah, but I agree with you. It is a sort of stock where you're struggling for ideas because you don't have a great dividend, and there's better stories with better growth. And
yeah, I agree.
I think you've got to say to yourself, why would you be in it?
Dave, if you had a portfolio of 50 stocks, then maybe you go, yeah, I'll do MVF. But if you got a portfolio of 20 stocks, then you go, no.
All right. Well, let's have a look at ALU because
I love this one. This is a favorite of mine today. This was a great result, Dave. I think that surprised really on the upside. It surprised me on the upside, I have to say. I wasn't expecting this today. And I want to own this now. They're actually going to accelerate the growth next year. I mean, music to my ears when I hear that. So they grew about 20% this year.
I'll bring it across.
Yeah, bring it across. So they did about 19%, so 20% EBITDA, right? But it's that guidance. They're going to grow between 20 and 25%. That is the key for me, Dave. If you look at that EPS, 50 cents US, right? Which is equivalent to about 80 cents. That puts on about 44 times. Dave, that's actually not too expensive for this story. This is trading on about 60, 70, 80 times. I'm loving this. I know they've gone up.
And here's the outlook. You can see.
There you go. You've got the 250, 255 meters, 23 to 26% growth in the US.
So with the outlook, what's the forward PE?
Well, you're gonna drop it from say 44. Well, actually now it's 20% up, which is gone. Yeah. Oh God! And now it's going over 50s again. We can't take a trick at the moment. So let's go another 20%. Drop it back to 44 again.
Right, but again, you can see this going higher, right?
Yeah, you can. I mean, look, it'd be amazing to get back to the low 40s now, right after this result. But you'll be struggling, and I need to buy this. This is a really good story to have in your portfolio. Quality.
All right.
Mm-hmm.
I think we're just going to be patient in this market, Wolf, because I think there's a chance that we're going to get this cheaper. And you saw how 360 sort of was volatile with a great result, and it should have gone on with it. Yep. It's not all making sense at the moment, right? So
no, there's probably a little bit of FOMO coming back in as well.
Yeah, so let's just hold our horses and see if we can get it somewhere, maybe around that 43 or 42. Yeah.
Yep.
BHP. Below trend. Obviously, it has been a sort of. Can I just put this on a long-term chart for a second?
Yeah,
on the monthly, it's been a sort of a bit of a dividend-paying stock, and we said as long as it holds the monthly. However, there's some gremlins out there now in the world, aren't there? With China slowing down, we're not too sure about iron ore. So, you've got to play it by the chart. If it goes below that 42.29 by the end of each month, then you've got to get out dividend stock or no dividend stock.
I agree. And the thing is, the BHP is they've chopped the dividend by about 40%, Dave, for this year, because obviously the results are not as good as the previous year, which was an amazing year for all these stories in a commodity space, because iron ore was ridiculous high, and so was coal. And this is what these guys breathe on. So obviously still a very good result, mind you, but not as brilliant as the ridiculous highs that we saw last year for these stories. So the dividend was cut, from say 13%, 40% down. Still 7%, still decent. You can't scoff at that.
Yeah, no, definitely. But that could obviously go down a lot lower if a company starts
Absolutely.
struggling. All right, let's have a look at Nanosonics because the weekly sort of broken trend is just holding in, and it's been very volatile even today, Wolfie. The market not really embracing that announcement.
Yeah, basically, the problem with Nanosonics, what it's got, it's every year is just so different from the previous year. With the cash flows, with the profits, it's just incredibly difficult to get your head around. There's no continuity, there's no consistency with this story. So, to be honest, pass for me. Pass for me. I like it, but I just need to have a little bit more out of this.
All right, I just want to have a look at Coles, because they more or less held up the dividend from what I can see. I think it's actually a little bit higher than what it was last year. But very, very flat, wasn't it?
Very disappointingly flat. I think, out of stocks like Coles and Woolies and MTS, you'd expect a little bit of growth, even though it's boring as bad shit. You'd think they can eke out 0 to 5% growth. This is nothing. It's got flat as attack. So I think the market's just really disappointed from that point of view, and probably going, well, probably Woolies or even Metcash would be the better alternative here. And look at the chart now. You just got to get out, wouldn't you? Almost. Maybe $16 is your last line of defense.
Yeah, okay, but as a dividend paying stock, what sort of dividend would it be giving here? I mean, wouldn't you say these sort of stories are very cyclical, Wolf? They have good years, bad years, and if you take,
not for Coles. I don't think Coles can be classified as cyclical because everyone has to eat every single year. It's not as if it's.
Yeah, but they tend to have decent margins. The margins tend to change a little bit from year to year, don't they?
A little bit, but they're steady, big performers year on year. They should be eking out 5% growth, right? That's to me how this stock should be going. But you can see it's just been very boring and not much going on here. I mean, of course, economy will probably move it around slightly from time to time. Yeah. But because it's a staple and staples tend to be relatively steady and a defensive story, you're really expecting more out of it than flat growth, to be honest. So I'm disappointed with what I'm seeing out of the numbers here. And if you're playing as a dividend play, I've got no problems. But are you going to get excited about 5.5%?
No, you're not. You're not going to get excited with it from that point of view. Oh. But would you rather? My question is: would you rather something like Coles as a dividend paying stock, or would you rather the banks? I know you like CBA.
If you're looking for steadiness, then yes, look, I can probably see bank and a Coles, something like that in there. But again, pick your battles, right? You can swap around. You don't have to be stuck in Coles. You can go, okay, well, let's have a look at Woolies. Is it a better proposition? Is it a better dividend? Is it a better chart? Or look at Medcash. Is it a better thing? I mean, there's similar stories in a way. So there's always movement around. And when I see a result that's flat, I'm not a slave to these stocks. I can just go, it's not good enough. I'm moving to another dividend story.
Yeah, well, Medcash is the best value for money out of all of them.
Yeah, exactly. Yeah. So that's why for me, there's a tendency to fall in love with no, Dave, no. I know you're pushing it, but it's a dividend story. Let's move on to another one.
No, I'm just saying because you put this on as a dividend story.
Yeah, that's okay, but we can move out. Just because I put it on there doesn't mean we're going to stick to it if the result is just not good enough. And I can feel there's a better alternative, right?
All right, okay, all right. Just now, what about WDS?
Yeah, look. Record result, even though there wasn't much upside to it, 4 or 5%, whatever. It's still a record dividends, record numbers. The only problem now is you've got these strikes going on, for Woodside and I think also for S32. So I don't know how that's going to pan out. I don't know what the costs are going to be like. So I don't know. I think maybe profits. Are we taking profits here, to be honest?
Right. So you would be holding it for the div.
Again, if you're trading this, you're taking profits. If you're holding for the dividends, yeah, no issues.
All right, thanks, Wolf. Now ARB.
Yeah, isn't it? A story that's looked like it wants to go up, and I did put this on. I think I put it on Ausbiz, Dave, as I thought this is going to go on with a nice result. The result wasn't great, but I think the market's now realizing that they've done a stupid thing and sold it down to under 30, right? So it's now recovering nicely. Is because they are back to growth again, right? We knew that the result wasn't going to be great, and they flagged it many times over. But you can see the reaction by the markets, right? They go, minus 20%. Oh my God, it's bad. Well, but remember, they're cycling off from these huge COVID numbers where it almost doubled the business over COVID. So that's now is been done, and now returning back to growth of much higher numbers, which is nice, right? So for me, when you look at the numbers, actually not bad. But now that I see growth in there, I think, maybe that over that $31, I'd be probably nibbling on this. I like this.
All right, from a fundamental view, but I think technically you wouldn't. Wolf and SSM, which is looking good.
Yep.
Yeah,
it's very steady, isn't it? If you look at the numbers over the last 2-3 years, Dave, fairly flat, profit-wise, EPS-wise, nothing on, good dividends. So maybe that's the only reason you'll be holding on this.
Do you think it looks like it's going to go?
It doesn't have enough in there. There's no growth. I can't go on no growth.
Right, so you don't think that's worth buying fundamentally? Wolf,
unless you don't expect the price up to go up to $1, but you're maybe holding out for a dividend. Yes.
All right. Pick of the day, Wolf.
Oh, it has to be Altium. I really love that result. Really, really strong. I have to say, I've got lots of good ones. MP1 with its upgrade to EBITDA, that's looking now like a really serious tech stock, right, on the way up. Really like Mad's result. That was very, very, very good as well. Any weakness, you're buying this. I'm really liking AUB's as well result with a, flagging 20% growth in 2024. I'm liking LYL, pretty strong. I'm also liking SIG, really good, right? So there's a number of stories today that I'm thinking, if I had a portfolio I was building, I'd be marking them. I'm just be marking them, putting my watch list. I want to maybe buy some of these things, even though I know you don't like the ARB chart, but you've got to understand from my fundamental point of view, this actually looks very good. So this probably is one of those cases where without the charting, I'd be nibbling on this.
It's just a worry, isn't it? Like, I don't know why it's sort of. I'll just see where it is by the end of the week. It most probably just an overreaction.
It could languish in that 30s for maybe a week or 2 or 3 or 4. But like I said, if you're taking the longer term view, and this is not a trading story for me. If you're taking a longer term view, I think there's enough in that announcement to say we're back to growth. Thank you very much. And I like the fact that they didn't give much guidance of what the growth is, so they could surprise on the upside moving forward. So as long as they hold at $30, there should be something quite interesting building.
Yeah, Wolf, and that what I think we're just gonna be careful at the moment before we buy these stocks and look at NHF and suddenly down. There's a lot of profit taking, and I think we're just gonna be patient. And I think there's a few stories there, and obviously like you're talking about ALU, AUB, which is SRG Hub.
Yep.
I think if we just wait down to the end of the week, maybe next week, I think we're going to get these at a better price.
Oh, Dave, I think volatility is here to stay for the moment with this China thing, right? So I don't think that's going to go out anytime soon. So like I said, I'm not in a rush, and I love Altium. I want to buy it, but I don't want to chase these stories. You had your opportunity with 360, right? Last week. It had a magnificent start. It came back to almost $8, which is really, I was surprised, but that was the markets for you. So, and look at XRF yesterday, Dave. I mean, that's another great point, right?
Yeah.
We thought it was a pretty decent result. Went up, and then down she went. There you go. So the volatility is there. You got to just be careful. Just got to be careful.
All right. Thanks a lot for that, Wolf. Wolfie, absolutely brilliant as always. You're the number one fundamental analyst in Australia, and we're so lucky to have you. That's absolutely brilliant. And Wolfie, thank you very much, champion.
Join us for tonight for ATA, Dave. I think, look, if anyone's looking for ideas, today's the day to join us on ATA because there's lots of good ones out there.
All right. Thanks, Wolfie. See you. Bye-bye.
Yes.